Accessory dwelling units, or ADUs, are one of the biggest opportunities in California real estate right now. And financing them is more accessible than most homeowners realize. Here are your options. An ADU is a secondary housing unit on a residential property. It could be a converted garage, a detached backyard cottage, an addition above the garage, or a converted portion of your existing home. California law now makes it relatively straightforward to build an ADU on most single-family lots. Option 1. Cash-out refinance. If you have equity in your home, you can do a cash-out refinance to fund the construction. This gives you a lump sum at closing to pay the contractor. The interest rate is typically lower than a construction loan. In Solano County, ADU construction ranges from $150,000 to $350,000 depending on size, design, and site conditions. Option 2. Home equity line of credit. A HELOC lets you draw funds as needed during construction rather than taking a lump sum up front. You only pay interest on what you have drawn. This can be more cost-effective during the build phase. Option 3. Renovation loans. The FHA 203K and Fannie Mae home-style renovation loans allow you to include ADU construction in your mortgage when purchasing a home. You finance the purchase price plus the ADU build in a single loan. Option 4. Construction to permanent loans. Some lenders offer standalone ADU construction loans that convert to a permanent mortgage once the unit is complete. These are less common but available through specialized lenders. Here is the financial case for ADUs in Solano County. A well-built one-bedroom ADU can rent for $1,500 to $2,000 per month. At that rate, the ADU pays for itself within 10 to 15 years while adding significant value to your property. At Stacey Solutions, I help homeowners and buyers evaluate which ADU financing option makes the most sense. Book a free consultation. The link is in the description.